How to make sure your business is tax compliant without losing sleep. What is tax compliance? Tax compliance simply means making sure your business is following all relevant tax laws, filing returns on time, paying what's due, and keeping accurate records. As a sole trader or running a limited company, compliance can cover self-assessment tax returns, corporation tax, VAT, payroll, and more. It's the foundation of avoiding trouble with HMRC. Without it, an HMRC inquiry could become a nightmare. That's the baseline. But knowing what it means isn't enough. So, what is at stake if your business isn't fully tax compliant? Understand the risks of non-compliance. This is the big one. Penalties for non-compliance can really pile up, as HMRC give higher penalties when businesses cannot show they took reasonable care, and add interest when payments are late. Late filing, incorrect returns, or failure to keep register for taxes can all lead to investigations or fines. Mark key deadlines in your calendar. Keep a clean paper trail. Set reminders for filing and payment dates. The cost of being reactive is far greater than staying ahead of your obligations. HMRC is increasingly using digital tools to flag suspicious activity. Don't give them a reason to look your way. Avoiding penalties is crucial, but preventing mistakes is even more powerful. Keep accurate, real-time records. Good record keeping is your first line of defense. Digital records on compatible software are required under Making Tax Digital if you're VAT registered. Making Tax Digital will also apply to income tax for sole traders and landlords with income over £50,000 from April 2026. Use cloud-based accounting software like QuickBooks or Xero. Track every expense, invoice, and payment as it happens, not months later when you may struggle to remember the details. Clean records mean fewer surprises, smoother tax returns, and less time wasted if HMRC asks questions. Accurate records are gold. But first you need to know what taxes apply to you. That's what we cover next. Know your tax obligations. Not all businesses pay the same taxes. Check your business structure. Are you a sole trader, partnership, or limited company? Do you employ people? What sector is your business in? Are you registered for VAT? Should you be registered for VAT? The answers to these questions determine whether your business needs to pay, report, or operate self-assessment income tax, corporation tax, VAT, payroll taxes, CIS, and more. If you don't understand what taxes apply to you, you could be missing filing dates, failing to withhold taxes, attracting penalties, or paying too much. Knowing your obligations puts you in control. But to stay compliant long term, there's one more key step you can't skip. Get professional support before it's urgent. Tax law changes constantly. Tax rates go up and down with every budget. What worked last year might not be right this year. Build a relationship with an accountant who understands your business. Don't wait for a crisis to ask for help. Proactive support means fewer mistakes, less penalties or interest to pay, structuring your tax affairs for more tax efficiency, and peace of mind knowing someone's got your back. Staying compliant doesn't have to be overwhelming. It just takes structure and support. If you'd like to learn more and make a big difference to your business, we talk about this in our free article. You'll find the link in the description below. Thanks for watching. Don't forget to like and subscribe for more simple tax tips.